Good morning. My name is Jane Morgan, and thank you for joining me today for the Hubify Limited Investor Webinar. The company has today announced its financial results for the full year ending 30 June 2021, with a strong performance across all metrics. To tell us more about today's results, I am joined by our CEO, Victor Sakunas, and our CFO, Nick Fitzgerald. I will now hand you over to Vic to run through the presentation.
Thanks, Jane. Good morning, everyone, and welcome this morning. Really pleased to be reporting that we've had an increase in results right across the board for FY21. I'm going to introduce Nick first, who's going to take us through the numbers. Then I'll come back and take you through some of the strategy and some of the divisional information on each of the areas of the business, which is something new that we haven't done before. So very keen to show all of you how each of the businesses are performing and actually what they specifically do. So I'll hand over to Nick first and get him to get us underway.
Thanks, Vic. Thanks, everyone. Excited to look at our results. And if I take you through where we ended up for our metrics, our key metrics up front, record growth we saw this year. And in revenue terms, that meant that we were up 15%, 18.8 million. We do look at recurring revenue. I mean, we're a telco and IT business, and that's important to us, how sticky our customers are. Recurring revenue is increasing at 37%. And that annualized recurring revenue is what we track it well. And on last results and with some of the acquisitions we made at the end of the financial year, really pleasing to see that up to almost 14 million and 64%. That takes us to the recurring revenue is 60% of our total revenue, and we're focused on increasing that. And margin on that has us at 12 million, again double digit to 32%, and margins with our sales force that there are at 77%. EBITDA up to 2.1 million, and that's an improvement of 19%. And profit before tax 1.24 million, up 24%. We're not showing profit after tax because there's a one-off tax benefit brought forward in the 2020 year, and so it's best to use it as a comparison before tax. And calling out from our balance sheet, cash, we've got 5 million in cash. The balance sheet has got an overall improvement in tangible assets, which is really encouraging, but well poised there on the cash metric. Okay, just key financial indicators. So these are the ones that we look at in our business as reflective of how we're traveling. That total revenue number, just illustrating that jump there from what we've reported at 18.8 million, recurring revenue as well. And uniform growth across these, in the 36% there. Gross margin underlying, we look at gross margin underlying with our contracts with customers and the cost of sales associated with those. So that's at 12 million, and that EBITDA increase as well at 2.1. Just to look at our recurring revenue, as I said, it is a very important metric for us. We have reported on the left the actual recurring revenue half on half that links back to some of our previous results announcements, and pleasing to see it continue to step up in double-digit amounts. The highest amount recorded in recurring revenue in the most recent half from January to June, up to 6.2 million. And on the right, that takes us to that exit annualized run rate, recurring run rate of 13.9, up 21%. And with the acquisitions that we're going to share later on this presentation, we certainly see that trend's set to continue. If I look at the next slide, just a revenue waterfall of what it, walking you through this. Continued organic growth has been demonstrated, and then there's the acquisition story. So the voice piece, 4.9% or 0.9 million in organic growth there. Strong performance from internet and networks with, in the divisional slides, we'll talk about some of those products that are contributing to that. And the mobility business, it was impacted by global roaming and the cessation of travel. We had a substantial amount of that number, a minus 1.2 million, was associated with that travel closure. And we're still looking at the contribution from mobility and then encouraged by what it could do when travel begins to open up. And then lastly, acquisitions in that result, 2.2 million, 6 acquisitions made within the year. And the largest contributions are within voice and data. Within this number, separate to what's on the left on the voice and internet networks numbers. What does that mean for EBITDA? Bridging that, we have seen improvements in our margin on organic sales and acquisitions. Our cost of sales as a dollar number were almost the same as 20, so there was some good margin improvements. We have seen admin costs increase, but they're largely employees. We've hired a lot more people. We've got a lot more people in the business as we're set to scale, and that's coming through in our employee numbers. And then depreciation and amortization, just calling out a minor. Again, that's to do with some of the acquisitions that we've made in recent times. So that'll continue to be a story as we get through those. In terms of looking at our divisions, I think it's important to look at how that looks on recurring growth. So as the 20 results to go to 21, these are the 3 key business units that explain the business. There's all organic growth across them. Mobility did see organic growth, notwithstanding the challenges in the travel area. That's up 7.2% to 4.3 million. Voice was up 48%. A lot of that was from acquisitions that we made in half one. And that took us to 3.2. And organic growth was still a factor there. And then pleasingly, the internet networks, I mean, that's up a lot, 63% from 2 to 3.3. And that growth organically is 32%. So quite strong in what we've been able to do there. And there'll be more on that in the division slides. And what does that mean in terms of our annualized recurring revenue? Well, on that exit run rate, we are seeing that growth in all divisions. It's up 24% half on half, as I mentioned. And it's a mixture of this organic growth and those acquisitions themselves. What I am calling out here, though, is margins. So on the mobile area, we do have strong margins, of course. That's predominantly against the Optus business, who have all those network costs. Voice and internet and networks, we're calling out a 39% margin there. And that's one that we've got together with voice and internet networks lumped together, just to the way that we're recording that. We're aiming to get more granular on it going forward. But it does include hardware purchases, so you can see what that is impacted. Hardware purchases for us are around the 1.5 million mark. So if that gives you some sense of that. Smart data, that's 1.54 million and a strong margin as well. And then managed services, which was 1 million going out with a margin of 46%, was above where our voice and internet network numbers are. And we are again looking to leverage that as we go into this current financial year period. So that's a summation of the results and how that sits across those key financial metrics. With that, I'll pass to you, Vic, and you can go through some of the vision piece. Sure,
thanks, Nick. Yeah, so just want to talk through these divisions one by one and just give everyone a picture of what we do in each of these areas. So in mobility, we have an agreement with Optus where we've chosen Optus as a mobility partner where they build the customer. So what we're doing is we're introducing customers to them onto their mobility network, and we're getting paid a recurring revenue and a commission every time we introduce one of those customers or services, one of those SIMs to Optus. Now, in reverse, they also provide customers to us to manage on their behalf. So it's a really great relationship because we have this 5-year relationship with Optus where we're getting paid to introduce a mobility customer. But at the same time, we're leveraging that and taking that mobility customer and cross-selling services like managed service, voice and data to those customers and building our recurring revenues. So it's a relationship that works well. And I'll go into some customer examples later to show you how that actually works. But again, our recurring revenues were up 7.2% in mobility on the back of the fact that we went into enterprise. So we started doing SMB sales only, where we were introducing those mobility customers to Optus, but now we're actually taking our enterprise customers as well and offering them those products. So that's where we saw an increase there. And where you see the decline in mobility, Nick talked to the fact that our global SIM business has obviously been hibernated on the back of travel, on the cessation of travel with COVID-19. But the other thing that we found in mobility was that our sales force that go out and win new mobile contracts with customers, there was a deferment of that during COVID, particularly for Victoria. So what we found was that during those lockdown periods, that customers were not committing and they were deferring those decisions. So we have strong pipeline in place, but it's deferred pipeline. So we took a bit of a hit in that mobility space for that reason. But what the team did, and what we actually did is we pivoted to say, okay, well, if we're not going to win new business in this space, and if the conversion is not going to be as high and there's going to be deferment in that revenue, then how do we pivot and grow the recurring revenues in our voice and internet network space? So what we did was we focused the team more on cross-sell. So what we had staff who would normally be chasing new business focusing on cross-sell. So that's where we've seen the increase in recurring revenue in areas, and we've seen an impact in the mobility space, which is a pain we were just going to go through in that space. So look, there's some metrics there in mobility. There's two areas of mobility. First is we focus in the small business and business fleet customer space, which is 10 to 300 employees. That's the core space for Hubify. That's where we sell across all our product segments. But in enterprise, we're now getting these enterprise customers who we're starting to introduce our managed services products into, and it's really starting to work for us. So, which was always the plan. The forecasted revenue from this area, purely from the Optus relationship, is 40 million over the next 5 years. That contract was renewed early this year, or in April this year. And then, as Nick said, once we can get, once travel recommences, and we still think it's going to be about a year before we're at full pace again in that space, then we're going to see incremental revenue in the mobility space from our global business. And the margin representation there of 97% is purely because in this mobility space, the network costs and all the operational costs sit in Optus's business in mobility, the majority of those. So it's really people and salespeople and headcount that our costs sit. So they sit below the line. Nick, if we can keep going so if we go to voice, so what we're doing here is, we saw an increase here through acquisitions and also through some organic growth. And that organic growth came from that pivoting away from, particularly when COVID-19 came in, and we looked at the opportunity to get customers working remotely. So there was some revenue, and we're partnered with 3CX in that space, where that product gives that remote working capability. So we're using that. Our key partners in voice are M&F Group and Vocus and Microsoft from a Teams perspective. And you can see there that our ARPUs are $286 per month per customer in voice. So these are small business customers. But what's really great about this voice space, and again with our cross-sell focus and really providing that one hub for our customers for all those products across telco and managed services, that we've got a very strong internet networks cross-sell rate of 69%. So 69% of our voice customers also have an internet and network service with us. So we've got long-standing customers in this space, some of which are over 7 years. However, our average tenure is at 36 months, and that's mainly because that's got a blended average tenure of the customers that we've acquired through our acquisitions and the databases we've acquired that are only new customers when you measure tenure. Our contract periods range from 36 to 60 months. So we're not seeing voice customers take under a 36-month contract. And again, the space that we're in there is that fleet space in small business. Thanks, Nick. In internet networks, I mean, these are the straightforward fiber, NBN enterprise connections, managed routers, Wi-Fi and wireless solutions. Again, that reverse cross-sell rate on our internet networks customers, so the percentage of our internet networks customers that have a voice service with us is 85%. So we're nearly getting to nearly in all cases where we're selling an internet solution, a business internet solution, we're bolting on voice. So that's good. Similar average tenure there. The contracts in internet, just purely because of our wholesalers and who are APT, M&F, Vocus and Optus, contract come down to around the 24-month mark, but we're still contracting customers up to 60 months on internet connections as well. This is where we saw good growth in revenue, and that's all recurring. So there's no upfront revenue in this space, and 63% growth in revenue on FY21. So, and again, Nick mentioned earlier that our gross margin here is a blended gross margin across. It includes hardware, includes voice as well. So we've got a blended margin because all those customers sit in the one bucket in the way we measure them. We keep going, thanks Nick, to managed services. I mean, this managed services space is really exciting for us. It's been a big focus for us getting an anchor managed service business into the Hubify family was critical, and getting the right business. We worked, and I mentioned this when we announced this acquisition, but we worked with IC&E for a couple of years before we acquired the business. So we partnered on some managed service customers. And, as Nick said earlier, there's good levels of margin in that business, and we plan to grow that business. We're already seeing, since only in the first few months, we're just seeing an excited sales team who have now got a managed service business with over 20 years of experience in-house to support them. And the take up from our key customers has been huge, and we've got a very, very strong pipeline. We're keeping the managed service team very, very busy. So we're going to see some great growth in managed services, and it's really exciting for the business, as I said. The average annual spend per customer is $22,500. That factors in a lot of small accounts as well. If you look at our top 20 customers, they have an average annual revenue of $186,000. Each of those managed service customers. And our pipeline sits around the $80,000 per customer. So that pipeline that we're looking at, that's the rough spend for these customers that we're bringing on. And what's important to mention here too is that if you look at the numbers on the right, managed services is sitting at 0.83. It's annualized now at around at $1 million. But in the hardware and professional services, you've got a lot more revenue in IC&E in that space. However, the pipeline that we're building and the organic growth that's going to come through is going to tip that, and it's going to be more managed services, a higher share of managed services coming through. That's what we're seeing in the pipeline of customers that are coming on board. But again, very exciting space for us and critical to us being that one-stop shop for Australian businesses in this, small to medium business space. If we keep going, so cybersecurity, we've been offering cybersecurity solutions to customers in our internet network side, mainly with Cisco product, Cisco hardware and management of routers, of Cisco routers that we do in our NOC. The ICNE business, our managed service business, has been supplying similar product and including Fortinet firewalls also. So that's been the product that has been supplied to now. But as we announced, we've gone into a partnership with Internet 2.0, and we're launching a product that's going to be a cyber security as a service product. So where the customer takes a license based on the number of users in their business, and it's a different model. It's launching next quarter, and it's going to change the way we do cyber security for our customers, and an exciting space for us. As we've said before, the Internet 2.0 guys are experts in this space. They've got a great product and that's why we've partnered with them. And that solution for our SMB customers is going to cover, everything from firewalls, intrusion detection and prevention, monitoring, threat hunting, cyber threat intelligence, or the full end-to-end cyber solution. So the license periods are 3 years, so good, strong contracted revenue there, contracted recurring revenue. So really looking forward to this being another addition to our and another division to our business and our revenues. Thanks, Nick. So just going through a couple of customer examples. There's some key examples here that you can read through. Everyone's got a copy of the deck, but if you can read through these, what this really demonstrates with these customers is that, we are selling multiple services to one customer, and that our customers they're wanting personalized service, and they're wanting this one-stop shop. They're wanting an opportunity to have one trusted partner who can just navigate through all of this technology and the changes in technology and the evolution of technology and new products that are coming through in all these spaces that we now cover. And this is the exciting part of what we're doing in the business. And our customers, and what we're seeing, particularly in the last few months, is validating our strategy, which is, this is the answer. This is the way to be the challenger business and to take on Telstra, and other major competitors, and really through personalised service and that full one-stop shop to really partner with these customers and do that. Harris Farm, I just want to point out, is a really great example in the managed services space. Harris Farm are a key customer of ours in ICNE. Harris Farm have a large rollout happening across their business that they've made quite public. We're partnering them on that rollout, and the team are doing a great job there. And we've got a roadmap over the next couple of years to work with Harris Farm on that rollout. But on top of that, all within 2 months of acquiring ICNE, we're now supplying Harris Farm their mobile fleet of 200 SIMs. So that's an example of where we take an acquisition, bring a customer onboard them into the Hubify family, leverage our one-stop shop to deliver other services to the customer. So we've won their fleet of mobiles. Bulgari is another great example of, Bulgari started out as a mobility customer. Then we deployed voice carriage across their 5 locations. Now we're rolling out fibre internet services. We've got hardware supply. We've got ICNE have come in there now doing managed services and device management. So again, an example of where we're leveraging the one-stop shop. So some great examples here. Coasset's another customer that we've had on for 8 years, who's just a real example of a customer that's trusted us for a long period of time, that are just they're coming to us now for strategic IT consultancy now that we've got a managed service and IT business in the family. So this is just typical examples of what our customers look like. So let's go through to just a little more into the strategy of what we're doing before we get to some questions. I know there are a few coming through. Firstly, this is a big market. So you look at these numbers, and the telco and the IT market and the internet market in Australia is huge. So, if we can get a small percentage of that market, we're going to achieve all our growth aspirations. So, and again, as I said earlier, we're well poised to execute in this space in having the one-stop shop. It's the point of difference for us, along with our reliable service and our personalised service. Having that one-stop shop is really going to drive the growth we need and where we win against our competitors and become that challenger brand. So again, we've talked about the one-stop shop, but really, what our customers say about us is that, and what we want them to say about us is that, we're agile and fit for purpose. So we have the right solutions for their needs across all those different areas of the business that you see there on the left around the Hubify hub. Mobility, voice, internet and networks, managed services, cybersecurity. We're proactive and responsive. We care about the customer experience, and we're reliable and we say what we do. These are the key things that we pride ourselves on, that we measure the team on, and that we drive our business on. So our target market, I said it earlier, 10 to 300 staff, located in major cities and metro areas in Australia. And again, businesses that value personalised service, reliability and forward-thinking solutions. So this is how we're going to market, and it's working. Thanks. We've talked about what we do in the divisional slides, but again, in mobility, it's mobile business plans. It's our global SIM product, which we will have a rebirth when travel recommences. Mobile device management, machine to machine and IoT solutions. That's mobility. In voice, it's hosted voice, inbound, leveraging Microsoft Teams, SIP carriage, and on-premise solutions. In internet and networks, we're finding big take-up in NBN enterprise-grade services, fibre, managed routers, and Wi-Fi and wireless solutions. In the managed services space, it's business IT infrastructure, communications and cloud. And in cybersecurity, it's managed security, cyber consulting, cyber compliance and firewall, which is, again, a new area for us, that will start next quarter. Thanks, Nick. So we've done a number of acquisitions which have helped build our recurring revenues in the business. We've seen 6 acquisitions in the last 12 months. We've now got our full service offering. We've got all the capability in-house now that's ready to scale. Our future acquisition pipeline isn't now just like-for-like telco businesses. Our pipeline consists of managed service companies as well that we're looking to acquire. So we've got a good, strong pipeline of acquisitions that once we're going to see the embedding of the current IC&E business and net hosted business and small business and that Internet 2.0 partnership coming to fruition over the next 3 months. And once that's complete, we're going to really be able to ramp up that acquisition execution. So, but we've got a strong pipeline of acquisitions and a number of targets we're working with right now. Look, talking about the growth strategy, obviously, in FY21, it was about organic sales and recurring revenue growth, strengthening our brand awareness. We only moved to the Hubify brand in this financial year. Scaled managed services, leveraging cybersecurity with our new customers and any of those complementary acquisitions. But our internal transformational initiatives that are happening that are going to help us grow and scale the business, and the things that we're focusing on internally, the Hubify way, which is something we're introducing, and branding as the Hubify way is about delivering a consistent customer experience. And that's how we do that right through our people in all areas of our business, from sales to onboarding to customer management and support and IT. And then integrating the managed services inside the businesses that I mentioned earlier is going to be critical over this next 90 days. Delivering the marketing and sales strategy catered to the SMB market across the one-stop shop, and connecting our sales and operations teams with better data insights and growing the talent and capacity of our people. So they're the focus areas that are going to take us into FY22, in a very strong way. Just looking at our customers, on the left, I mentioned some of the customers. We obviously can't put all of them on here, but there's a broad range of customers. Everything from fashion to not-for-profits to pharmacy and retail chains to engineering groups. You've got a mixture of large and smaller customers there. And on our right, these are our key partners who really help us supply they're our partners of choice to provide our customers with the best product and service. Thanks, everyone. That's our update. So I think we're going to go back to Jane now for some questions, and over to you, Jane.
Wonderful. And again, if you do have any questions, please use the Q&A function at the bottom of the screen. Look, let me jump into it. Nick, this is probably one for you. So looks like a great overall result, and it's great to see more granularity in the divisional numbers. Can you run us through the positives and any negatives in each division, and what sort of organic growth rates are you expecting in FY 2022?
Yeah, thanks, Jane. Yeah, no, we were really encouraged by the result in Internet and Networks, that organic growth that was there. Some in Voice as well. But 63% in organic growth or overall growth in Internet and Networks was strong, and we see continued double-digit growth there. There are headwinds with the mobile business and that deferral of appointments and then investment decisions that are there. That's a function of where we are with COVID, and we've equally got some customers that are really impacted by COVID, especially in areas like hospitality. So we're looking closely with those customers and how we're able to support them, but looking at what we can take advantage of once things open up more, and really leverage the success we've had through that sticky revenue and recurring revenue and its increases, and how that translates into that long-term customer that we can ultimately cross-sell.
Perfect. And Vic, I'll go to you for this one. So can you run through the acquisition of the Anchor Managed Service business? We understand that this is an area that the company's been looking to expand into for some time. So can you run us through the strategic rationale for this acquisition and the past future growth profile of the business?
Yeah, well, I mean, the choice in acquiring ICNE and bringing them on as the anchor was that we were looking at a few key things. Firstly, strategically, we wanted MSP capability in the business, and we wanted a leader in that space who had the experience that we have in telco. We know how critical the experience that we have in telco is. I have more than 20 years experience, so do a lot of the executive team. So, we wanted to bring that same level of capability in. So it was about right partner, experience, someone who's going to come on the journey with us. So that was the first thing. Obviously getting managed service into the business, and we worked with John Martin, who was the CEO there, on a number of accounts. So it was really about getting the right partner that we could scale, and that's the piece that we're doing now and that we're embedding. In that business, in that ICNE business, growth has been modest over the past few years. But we're going to see that change, obviously, now that we've got our telco customer base, of access to over 20,000 customers who we can introduce to those services to. So very exciting. We're expecting organic growth on the back of that, well into the double digits from that business over the next few years, and it's an exciting space for us. The revenue, again, even though the revenue, and we talked about this when we announced this acquisition, even though the revenue is 40% truly recurring in nature, the remainder of the 60% is repeatable revenue because it's coming from the existing customer base and it just continues. It's refreshing of hardware, it's projects in professional services and so on. But we're going to see that flip as we bring on new customers, because we're going to have high levels of organic growth, and that organic growth is going to come predominantly through managed services. So we're going to see that truly recurring revenue number increase in that space. And really, it's about this space is about our dedicated sales team and our dedicated sales team with the relationships we've got with customers, introducing, having an aggressive rollout and introducing these managed service solutions to those customers.
Perfect. Thank you. Sorry, there's a few coming through, so I'm just jumping around. We did touch on this, but Nick, I might hand this one to you. So can you talk about the performance of the businesses we've acquired during the period? And are there any early signs of the cross-sell strategy playing out?
Yeah, sure. So we acquired 6 businesses. We talked a lot there about the managed services business, IC&E, which we're rebranding. But the other 5, 3 of them are voice and data businesses with customers, and they're all meeting their acquisition assumptions. We're exceeding those, and they've been a key cornerstone to the recurring revenue, if you like, in the growth that we've seen there in voice and data and internet and networks. We've got a lead generation business as well, which is exceeding expectations as well. And that affords a lot of opportunities in how that cross-sell can work and how we can make use of the omni-channel marketing down the track. So we're certainly very encouraged by what we can do there. And the last of those acquisitions was a geographical expansion in Perth in mobility, again, a like-for-like business. But pleased to say that they're all delivering on what we flagged as their acquisition numbers, and we're looking to exceed those and see that continue.
This one's come through quite a few times actually, but Vic, I'll hand to you. So do you have any plans to acquire more businesses going forward?
Yeah, well, look, while we're conscious of maintaining the disciplined approach to acquisitions and the integration processes, with the strong underlying organic business we have and 5 million on the balance sheet, post the last acquisition, we're still actively pursuing further accretive acquisitions in the near term. At present, we've got a pipeline of 35 million roughly of acquirable revenue from a variety of businesses in this space that we're currently reviewing and talking to those businesses. It's also worth pointing out that we're still in this unique position where our peers like UWL, ST1, M&F, Over the Wire, and 5G networks, they're like our big brothers, and the acquisitions we're looking at are not really going to move the dial for them right now. So when you look at acquisitions, with that 500K to $3 million in EBITDA, we sit in a unique position to be the winning bidder in those and the right suitor with those acquisitions. So all of those listed peers have shown that through a good mix of organic acquisitive growth, you can generate sufficient scale to become a serious competitor to Telstra's and Optus's in the world, and the market rewards you as a result. So that's our focus. And again, we'll do that as that one-stop shop. It's our intention to follow the same path that we have. Again, the board and management of the business own 67% of the register. So we're committing to building this company, from what is a circa $35-40 million market cap company into a 200 million plus business over the coming years. So we're not going to do that just organically. We're going to need to do that through acquisitions as well. So we're going to continue following that dual-pronged approach.
Thanks, Vic. Webinar attendees just sort of probed a little bit more. So breaking down on that pipeline a bit more, can you provide any more colour on what sort of acquisitions we're looking to pursue?
Yeah, sure. So if you look at the acquisitions we've been doing in telco that have an EBITDA of circa 200K to 500K, they're definitely in the mix. and they're all highly accretive. You know, we're getting them at you know, after synergies, two times is what we've been paying for those businesses, 2 to 2.5 times. So they're really just easy businesses to bolt on, and also in the managed services space. So, you know, the managed services space is exciting. You know, you're paying higher multiples in that space, but you're getting customers that really are, you know, you really are their trusted advisor, and they're sticky customers. And, you know, we see with an example of Harris Farm that we've been able to bring a customer like that on and sell mobility straight away. And they really do consider you as their trusted advisor. So we're bringing, you know, we're definitely looking at businesses in that space, and even bigger ones than what we're looking at in the telco space. So we're talking, you know, revenues of 10 million, you know, $2 million in EBIT, those sorts of businesses.
So as the numbers come through, so what does the Internet 2.0 opportunity look like? And are there any thoughts on how big that could be moving into FY 2022?
Yeah, sure. We're right in the middle now of a go-to-market strategy on Internet 2.0. So we've created our own Hubify sub-brand, which is that division, and that's really promoting Internet 2.0. We've got a dedicated sales team that are detailing this with our customers and refining that approach. So where we talk of there being a one-stop shop, this is a great entry-level place for us to be able to call on what are new customers, in a lot of cases, professional services, for instance, and say, here's something we can deliver to meet your cyber needs as a SaaS product, but then afford the opportunity on managed services or other adjacencies. So we're quite encouraged by that, and we're looking at sales on Internet 2.0 through Hubify as we speak.
Another one's just popped up. So are there any other strategic partnerships like Internet 2.0 that can move the dial?
Yeah, look, I think strategic partnerships that can move the dial. Look, I think the key strategic partnership that we have that can move the dial is the Optus partnership. I think that there is a significant opportunity with us with our Optus relationship, particularly in enterprise, that we can leverage that to grow revenue in the managed services space. So if you look at the kind of the managed service numbers that we have, it's not going to take many large enterprise customers before we're actually getting into some very aggressive organic growth in that managed services space. So our focus right now is that sort of strategic relationship, so leveraging that and the one with Internet 2.0. But at the same time, you know, we haven't bought a large managed services business. We bought a good sized business to be our anchor that can become part of the Hubify business, and that can help leverage the existing sales force. But there'll be opportunities to acquire larger businesses in the future.
Okay, just one more that's come through. So Harris Farm is on a growth strategy. What does this mean for Hubify?
Well, what it means is that we're going to be partnering with them on every store rollout. So essentially what it means is as every store rolls out, there's revenue that comes into Hubify, you know, of circa, you know, close to $250,000 for every store rollout. So that's the kind of revenue that comes in on each project.
Perfect. Well, I think that's covered everything for today. So a recording of today's webinar will be posted on the company website. And if we have missed anything, please feel free to reach out via the contact details on the bottom of our ASX releases. But thank you for joining us today. We look forward to updating the market shortly.
Great. Thanks, Jane. Thanks, everyone.
Thank you, Jane.